Have you ever stopped to think about what it actually takes to manage the world's money? We're talking about financial giants that control assets larger than the economies of most countries. Okay, let's dive into this, because their success, it isn't just about making smart investments, it's about something way more fundamental: mastering their costs.
So the real question we're exploring here is this. Behind all the massive profits and these mind-boggling sums of money, there's a kind of hidden story. A story of relentless, super meticulous cost management. And that is the secret engine that powers the leaders of global finance. To really get our heads around this, let's just focus on one company, BlackRock. They are the biggest player in the game. When you're managing that much money, every single decision, every tiny expense, it just gets magnified to an incredible degree. So how on earth do they do it?
Just let that number sink in for a second. $11.6 trillion under management by a single firm. I mean, it's a scale that's almost impossible to comprehend. But for the people inside BlackRock, managing that number down to the last cent, that's the whole game.
This quote from Benjamin Franklin, it's the perfect way to think about what we're about to explore. For these financial titans, success isn't just about the big wins. It's a constant, day-in, day-out battle against those small leaks. The real story is figuring out where those leaks are and how they're being plugged.
All right, so to understand how these giants operate, you've got to know that they are not all built the same way. They really come in two distinct flavors. It's a tale of two very different business models, and each one has its own approach to managing costs.
So on one side, you have the independent giants. Think of firms like BlackRock. Their entire world, their sole focus is asset management. And then on the other side, you've got the conglomerate divisions. These are the asset management arms of these massive banking institutions, like JP Chase or Goldman Sachs. They exist inside a much, much larger financial ecosystem.
And this structural difference? It leads to a really fascinating question. Who's actually more efficient? When you look at every single dollar they spend on operations, we're talking everything from salaries to software, who is better at turning that dollar into revenue? Well, the data gives us a surprisingly clear answer.
And yep, the numbers tell a pretty clear story. On average, the large independent firms, they squeeze more revenue out of every dollar they spend, about $1.47. The conglomerate firms, they're right behind them at $1.38. Now that might seem like a tiny difference, just 9 cents, right? But in a multi-trillion-dollar industry, those 9 cents add up to billions. It's a perfect example of how focus and scale can create a really powerful efficiency edge. Okay, so where is all this money going? Let's move on and break down the internal machinery, starting with the single biggest expense for every single one of these firms: their people. Just look at how dominant one category is here. Personnel costs, that's salaries, bonuses, benefits, the whole shebang, make up a staggering 53% of all operational expenses. That's more than everything else combined. It just underscores a fundamental truth about this industry. At its core, asset management is a people business. And here's why that human element is so expensive and so essential. A survey by Vanguard found that an overwhelming 88% of clients say that talking to a real, live, human expert gives them emotional peace of mind. In a world full of algorithms and automation, that feeling of trust and confidence, well, you just can't digitize that. But make no mistake, this isn't just about making clients feel good. This huge investment in top-tier talent is expected to deliver top-tier results. I mean, at a firm like BlackRock, each employee generates, on average, nearly $1 million in revenue. It just goes to show you that this high cost is directly tied to incredibly high productivity. Now let's move to the second major cost center, and this is the one that's growing faster than any other: technology. This is the new arms race in finance. Every firm is fighting for a technological edge that can deliver better performance and, of course, greater efficiency. And this chart just shows the trend perfectly. Take State Street, for example. A decade ago, their tech spending was about 10% of their total costs. Today, it's nearly doubled to over 19%. This isn't just about keeping the lights on anymore. This is a strategic shift, pouring billions into AI, data platforms, and automation. Some firms have gotten so advanced that their own internal technology has become a product itself. The best example of this is BlackRock's Aladdin platform. Think of it as the technological heart of the company, managing risk across their entire portfolio. But here's the genius part. They also license it out to other financial firms, turning a massive internal cost into a massive external revenue stream, to the tune of $1.6 billion in 2024 alone.
And you can see that everybody is placing their bets in different areas. BNY Mellon, they're diving deep into blockchain. JP Morgan is using generative AI to create entirely new kinds of investments. And Franklin Templeton is teaming up with Microsoft to build a whole new AI platform. It's this frantic race to find the next big technological advantage.
So after looking at the people and the technology, what's the big takeaway? What does it actually take to win in this high-stakes game? Well, let's try to synthesize everything we've learned into a kind of modern playbook for success.
So the winning playbook really seems to come down to 5 key strategies. First, a relentless focus on talent. Second, making technology a top investment priority. Third, and this is a big one, building ecosystems, even partnering with competitors. Fourth, optimizing physical space with hybrid work models to slash costs. And finally, completely transforming marketing for the digital age with data-driven engagement.
So, what this all tells us is that the very nature of competition has changed. Success in asset management today is just as much about operational excellence as it is about investment genius. The winners are the ones who can build the leanest, the smartest, the most efficient machine possible to manage all those trillions.
And that leaves us with a really fascinating question for the future. We've seen that right now, the human touch is the most expensive and, you could argue, the most valuable part of the business. But as artificial intelligence gets more and more sophisticated, will that always be the case? Well, that is the trillion-dollar question these giants will have to answer next.